Hello, everyone. I'm Josh Weiner of Seppi Solar, and I'm here with my good friend Rob Brown of Sustainable Energy and Power. And today we're going to talk about how to prepare for the ITC step down. I'm Josh. I'm Seppi Solar. I've been very interested and very happy with ITC for my whole career. Rob, where do you come from? Tell us about your company.
I run and own an energy consulting firm. I used to work with energy, or rather electrical distribution, with Graybar. I had a lot of experience with them, kind of consulting with commercial and industrial businesses, that sort of thing. And I left Graybar to do that on my own. Now I just kind of consult with those businesses and client representative and that sort of thing.
Great. So I think it's safe to say an ITC has a special place in your heart, too.
Absolutely. I think that, if it weren't for the ITC, we wouldn't even have a job, right? We wouldn't have an industry. So it's a very big part of what I do.
Perfect. I mean, let's springboard right off of that. Like, tell me, why has ITC? I mean, this might be an obvious question for most of us that live and breathe solar on a regular basis, but why is ITC so important? I mean, there's other countries outside the U.S. that don't have ITC that do probably more. I mean, some countries do a lot more solar than even the U.S. does. So why is ITC so impactful and important for our industry?
Yeah, I agree with you. There are places that don't have the ITC that have more solar than we do, but they also have a different environment. Here in the United States, we don't have the same kind of environmental policies to keep coal and those sorts of energy production facilities expensive, right? Here, I was working with a client not too long ago in North Dakota with coal-fired power plants and super cheap energy. Without the ITC, solar doesn't have a chance. You have to have this sort of program while solar is more expensive in order to incentivize people to go that direction, make it cheaper. And then over time, the idea is that solar gets its legs underneath it, has its own kind of industry presence, and the ITC can kind of slowly go away over time, like hopefully any government incentive.
Yeah, I'm right there with you. Part of me actually thinks the ITC becomes sort of a crutch, to allow some companies who probably even shouldn't be there to stay there.
Mm-hmm.
So I actually look forward to the ITC stepping down. I'm sure I have a lot of colleagues that would disagree with that, as I'm sure you do too. So then, but why are people, for the most part, concerned about the ITC stepping down? Like, why, you heard my opinion just now, but why would that be a problem for someone else?
Well, in my opinion, I think there's like we said before, there's this kind of incentives need to step down as the industry comes of age, right? And the issue for me is timing. Is if it steps down too soon, then the industry doesn't have its wings yet, hasn't kind of grown out of its embryonic stage, and it dies. But if you keep it on too long, look at the coal industry or corn, right? You have incentives that are on way too long in these very established industries that should be going away, right? Solar, it's all about that timing. Some people think it's too soon. Some people think it might be too late, and it's all kind of the politics around when is the right time.
What do you think? Like, I know this ITC steps down to 10% ultimately, but and then it plateaus. Residential goes away. Fuel cells go away too. What would happen if solar went to zero? C&I, utility, all of it. Like, if ITC completely went away down to 0%, is it the same answer?
Again, when?
It's when and where. Right?
If it happened now, that would be catastrophic to many parts of the country.
Yeah.
Not other parts of the country, right? I think it would be just fine. But again, it just kind of depends. One of the things that, and you mentioned kind of previously, I just wanted to, not to get us off track, but you mentioned the storage concept and the fuel cells and things like that.
Yeah.
I have a couple clients right now that are discussing having a battery storage system kind of paired with their solar and kind of get in before the end of the year, before things start to change and step downs and things like that. Wanted to, get your thoughts on this. I mean, I understand, and you're the engineer. I'm just a consultant. You have there are certain things that kind of qualify a battery to be part of the ITC. Is that right?
Yeah.
Like how does that kind of shake out?
I mean, actually, as we're talking about ITC, I feel like we tend to gravitate or knee-jerk think about solar and
Right.
renewables, but actually, I think ITC has I agree with you. It doesn't seem like the actual quantity is going to hurt solar, at least depending on where and when that happens, in
Right.
California versus other areas for sure. But storage is the one that's still very early stage, and it's
Yeah.
still expensive, and
And it needs its incentives.
it needs its incentives,
Yeah.
absolutely. What I do notice, however, is at least in the case of California, that the rebate program in California actually takes money away from you from the state if you're applying for federal ITC. So in a way, ITC going away, you actually have two options with California SCHIP. If you actually
Right.
get more money from
Right.
the state if you're not getting the federal ITC.
Yeah.
It's kind of funny, you know.
That's a fair point.
I mean, it makes sense. You know, California doesn't want you to get paid for.
Sure.
You know, they don't want you to actually run like a. I guess it would be like a greater than 100% IRR. You know.
Right.
But yeah, I actually think I'm more worried about ITC's impact on storage than I am solar. And so, you know, that's actually why in one of Seppi Solar's, one of our white papers, which you can find on our website at seppisolar.com, we actually do go into some detail about the implications of DC versus AC coupling, because storage, of course, has the 75% cliff. You know, if you're charging storage from a renewable resource like solar or wind, and less than 75% of that energy going into the batteries coming from a renewable source, then you actually lose the ITC. If more than 75% is going into the battery, then you get the ITC pro rata for storage. So it's a little annoying, a little complicated, but it works. And then
But that's
whether
that's
you
AC
or
coupled.
actually either
Okay.
AC or DC coupling, you have the 75% cliff. It just so happens an easier way to verify, or an easier way to ensure that compliance is with DC coupling than with AC. Because with AC coupling, you end up having two separate inverters connecting on the AC side. You have to M and V everything, which is a fancy way of saying, you know, measure and verify and count every electron going from the solar into the battery. Okay, check, there's one, there's two. I mean, literally, you're counting electrons, or kWh, and making sure more than 75% leaves from this source and heads to this destination. Whereas with DC coupling, you can actually, as our white paper suggests on our website, you can actually ensure by design, no M and V, by design, the battery actually physically cannot charge from the grid, and therefore, by deduction, all energy going into the battery, if there's two sources, one's the grid and one's solar, and you can't charge the battery from the grid, by process of elimination, it's only coming from a renewable source, and then you get that ITC eligibility, and it's really clean and
So it
simple.
sounds like by designing it that way, not just DC coupled, but also kind of what you're talking about in the white paper and what Seppi Solar does, it sounds like by doing that it saves a lot of headache from measure and verification, extra equipment, submitting reports to the utility. All that stuff goes away because it's just designed right.
Ironically,
Right?
yes, absolutely. And ironically, two birds birds get killed by the same stone, because the rules for ITC are the same rules for NEM. So when we comply with NEM, with a solar plus storage system, when we don't charge that system from the grid, it turns out the utility lets us export energy from the battery into the grid and get NEM credits for it. I mean, literally, it's a battery exporting those electrons. And NEM is a credit reserved for renewable technology. So for a battery to discharge into the grid and get credit for it, it's kind of groundbreaking. And that was good work that Seppi Solar did earlier this year. But then,
That's awesome.
And then likewise for ITC compliance, again, if you're DC coupling and you're only charging from the renewable source, then you're also compliant with ITC. So same stone kills two birds.
Cool. So back to this client I was talking about. I'm helping them with kind of storage and solar and everything, kind of trying to get in before the end of the year. Okay, we come to you, we get this thing designed right. We have a DC coupled. They're going to put batteries in with the solar. Everything's great, just like we talked about. What do they have to do to make sure that they get this year's tax credit before it steps down next year?
So the way we understand it from the IRS, and they had released in the middle of 2018 timeframe a clarification, an announcement. It wasn't a ruling, but it was just a clarification on how this works. There's two tests that you can meet. One is called the physical work test, and the other is called the 5% safe harbor test. So the physical work test they're both kind of straightforward in their own way, but physical work test is if you're in construction, continue through construction and place the system in service, have a continuous effort of that construction work, you've passed the physical work test. So that's a case where if you started building in 2020, and you started construction in December 2020, but you PTO or you place in service in 2021, you get ITC from 2020. And then same thing with the 5% safe harbor. It's kind of the same vein. You don't have to necessarily start construction, but if you're progressing through the work continuously and you've expensed, you've already put up 5% of your money, you've spent 5% of the total project costs, that also qualifies you for that year's ITC when you started the work.
Okay, so call it a down payment, maybe 5% in December of this year grants me this year's tax treatment, even if it's completed next year.
That's right.
Okay.
That's right. And I wouldn't call it a down deposit. It could even be continuously paid throughout the process. You know, it doesn't have to be all in like one lump sum upfront fee.
But that amount has to be paid before the end of the year.
That's right.
Okay. So kind of a curveball for you. So let's say a $100,000 project.
Yeah.
My client puts down $5,000 to get their safe harbor.
Yeah.
But something happens down the road and there's
Yep.
a change order and now it's a $150,000 project in total. What happens?
That is a great question, and actually the IRS ruling, clarification actually uses, they actually go through specific examples where that is an
Perfect.
example.
Oh.
What happens if there's a change order? What
Yeah.
happens if the project cost goes up or down? It
Yep.
does put the ITC at risk. It does.
Okay.
But they do, there are provisions that allow you to keep it depending on the definition of continuous effort and when the money actually strikes.
Got it.
So, yeah, but that's a really good point.
Okay.
It's a
Yeah, something to watch out for. I mean, the client that I'm consulting with right now, they have a little bit of cash on hand. They're just going to put down 10% just to make sure that they get the full 30% no matter what happens in the project.
Yep.
But yeah, just wanted to kind of figure out
Yeah.
what the ramifications would be.
I think that's a great strategy. Based on my interpretation, my reading of the IRS clarification, they should do that, the 10%, and keep continuous work
Of course.
flowing.
Right.
The
If
IRS
they just
also,
kind of hold off and just wait for it, they lose out on all of that.
That's right. That's right. The IRS is smart. They're not going to.
Yeah, I'm telling my client to never. So things are going to wait, right? Things are going to pause. The utility's going to take some time. Requests and interconnections are going to take time. But as long as the waiting period is not on the client, on my client, on the end user customer,
That's right.
then we're okay.
Yep.
As long as they don't wait on anything, we should be fine. Would that be accurate?
Yep.
Okay,
Yep.
good.
And
Making
then-
sure I'm consulting correctly.
And then there is a final very hard deadline too, of
Right.
like January 1st, 2022. If the systems are not placed in service by that deadline, then you're really screwed. You lose everything.
Got it.
No, I mean you lose all ITC. So
Wonderful.
yeah.
Cool. Well, thanks for answering a couple of my questions.
Of course. Yeah, and then actually one last question, or one last just point that I think is actually really important with ITC are fuel cells. You know, we don't deal a lot of it at least in the solar and storage field, but it turns out flow batteries actually might qualify for fuel cell ITC because on a standalone basis, you know, most storage has to be coupled with a renewable source in order to be eligible for that ITC. Because really, for all intents and purposes, storage is piggybacking on a solar ITC. But it turns out with flow batteries, since they comprise a fuel cell, and if anybody goes to irs.gov and you read the definition of a fuel cell, you'll find that actually flow batteries kind of meet the definition of a fuel cell. And on a standalone basis, no solar, no renewable, just a standalone flow battery storage system might actually qualify for the fuel cell ITC. And that flow batteries are like this promising technology that are, you know, they've been out. There's a lot of uptime, a lot of systems installed. It's great doing wonderful things, but it's got this little problem that lithium is super costed out. The supply chain and the technology and the products, they're ubiquitous now. They're in our laptops, and we got 20 lithium batteries sitting on this desk right here. So flow batteries still need to catch up a little on the CapEx side of projects, and this fuel cell ITC actually really helps make a big difference in that upfront first cost. So anyway, I mean, you know a thing or two about batteries. Do you think the fuel cell ITC is going to make that stepping down, like the solar ITC is going to make implications for storage? Or?
Yeah, storage is very much in its infancy, and I think it needs as many rebates as it can until it gets on its feet. We're seeing, I think, that we are with storage now as we were with solar in 2011. That it's right in its infancy. We really need to infuse it with some help so that it can get on its feet, and then we can do without rebates at that point. But we're just not there yet.
So, last question: in your crystal ball, when do you think storage comes out of its infancy? If you had to wave a magic wand and just take a wild guess.
So many factors. So many. I couldn't answer that.
You gave me a curve. I got to throw you a curve.
That's fair. It's a good curve. No. Fair enough. Oh gosh, from the different things that I've seen, I'm just going to throw a wild guess out there. I'd probably give it, I don't know, 7 to 10 years
Yeah,
before it's really taken on.
yeah,
It's gonna be fast, but it's still gonna take some time.
yeah. Awesome. Well, thanks so much for joining us. Please check us out at sepisolar.com, subscribe to our CNI Project newsletter, and follow us on LinkedIn and Twitter. And we're going to have many more conversations like these with Rob and with others about really important issues that impact all of us. So thanks again for joining us.